Good morning, it's Friday, June 16th, 6 a.m. Central Time. I'm Philip Streible, Chief Market Strategist at Blue Line Futures, giving you a precious metals minute. So looking at the precious metals overnight here, we're slightly firmer. You got gold up $7, 1978. You got silver up 15 cents, 24.10. Copper's down a penny at 3.89 after a great run yesterday, and then platinum up $1, 9.93. We should be able to retest that $1,000 level here if we get some strength and momentum in the other precious metals. So if you watch yesterday's video here, I kind of laid out a plan, a scenario to give you what would turn those precious metals around after that hit job we seen in the overnight, and it played out perfectly. So the ECB, which is the European Central Bank, they raised 25 basis points to 3.5%. And why is this important here? Because if you look at the weighting of the euro currency versus the US dollar, remember they work like a teeter-totter. It's an inverse relationship. The euro currency here, 57.6% weighted against the dollar. You've also got the British pound, which is about 11.9%, and the Canadian dollar, 9.1%. You add those three together here, you get 78.6% against the US dollar. Now, those other two currencies I mentioned are breaking up. Pull up a chart of the Canadian dollar, pull up a chart of the British pound, breaking out to the upside. Trend following traders are buying those currencies, and the euro currency going up like a Nike swoosh here, all against that US dollar. So remember the relationship. You get the euro currency going up, you get the US dollar going down, you get gold futures going up, and all the other commodities are going up with it. So your silver, your copper, your platinum, your crude oil, your grains, everything else gonna go up against it here. So then you get, so we had a little bit of bullish momentum, then you get that initial claims number here coming out, crushing expectations again, 262,000 versus 246 expected. You look over to June 8th number, you get 261 versus 236, both cycle highs. Now, the jobs market is weakening, and it's weakening here a little bit faster than what the Fed would like. And the playbook is exactly like 2018. And I'm telling you, this is really important for that gold market, because when the economy weakens and the Fed can no longer raise rates, this is the December 20th meeting in 2018. The Fed came out and said, we're going to raise rates 3 more times. What happened? GDP had peaked, job growth started to stall, things started to stall. They had to accept some of that higher inflation that was out there, and the Fed goes on a cutting cycle, and you get your gold going up from $1,350 on up to $2,000. So that's why I believe that there's a great possibility here, if the Fed starts cutting, for gold to go where it's at, 1950, say the support level, 2,000, we start breaking through it again. I think we could easily move back up to $2,500, making an all-time high. That's why we're positioning out. We're looking at those far out contracts, the December contracts, and then also on silver. You get it. Silver's going to go up $30, $35, $50, who knows? Look at that gold silver ratio. It's probably going to trickle down here as more momentum buyers come in and start buying that silver market up. So that's the playbook that we're looking at. That's the long-term positioning. Again, I'm Phil Streible, Chief Market Strategist at Blue Line Futures. I'll post an article here on Kitco in a little bit, give you a little bit more details on it. I'll post some charts as well, probable ranges on the market here for the short-term players. And if you have any questions, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.